Hello friends, and welcome back to our channel. Today we're diving into the amazing world of Warren Buffett, one of the greatest investors of all time. His journey and investment wisdom are not just lessons in finance, but also in life. So sit back, relax, and enjoy the story of how Warren Buffett became a legend. Our story begins with a young Warren Buffett in Omaha, Nebraska. Imagine a boy with a keen eye for business, collecting soda bottle caps to see which brand was the most popular. This curiosity led him to his first business venture at the tender age of 6. Warren would buy 6 packs of Coke for 25 cents and sell each bottle for a nickel, making a handsome profit. This simple yet effective approach would become a cornerstone of his investment philosophy. Fast forward a few years and Warren is now investing in stocks. His first investment at 11 taught him the valuable lesson of patience. He bought 3 shares of Citi's Service Preferred at $38 per share. When the stock dropped to $27, he panicked but held on. The stock eventually rose to $40 and he sold them, making a small profit. However, the stock then soared to $200, teaching Warren the importance of long-term thinking. As Warren often says, the first rule on investing is don't lose money, and the second rule on investing is don't forget rule number 1. This simple strategy, learnt early on, shows that investing doesn't need to be complicated. Buy good businesses at fair price and then hold them on forever. Warren's investment journey continued to flourish as he grew older. But here's the thing, Warren isn't a genius in the traditional sense. He didn't ace every exam in school or solve complex mathematical problems. Instead, Warren's real strength lies in his temperament. Imagine Warren sitting in his quiet office away from the hustle and bustle of Wall Street. He reads for hours each day, absorbing immense amount of knowledge and making calm, rational investment decisions. Warren believes that investing is more about temperament than intellect. You need a stable personality, he says. You need a temperament that neither derives great pleasure from being with the crowd nor against it. This ability to remain calm and rational regardless of market conditions sets Warren apart. He doesn't get swept up in the market hysteria or panic during downturns. Instead, he stays focused on the intrinsic value of businesses he chooses to invest in. Let's now move to another crucial aspect of Warren's strategy, long-term thinking. Picture Warren in the late 1980s making his first national TV appearance on PBS. He was worth $500 million back then, a far cry from his current net worth of over $100 billion. During the interview, Warren shared a gem. If you're making a good investment in a security, it shouldn't bother you if they close down the stock market for the next 5 years. This long-term perspective is what makes Warren a master investor. He doesn't worry about the daily market fluctuations or short-term gains. Instead, he looks at the bigger picture. Warren buys businesses that he believes will perform well over the long haul, regardless of the short-term market volatility. One of his famous investments is in Coca-Cola. Warren invested in Coke in the late 1980s and he has held on to those shares ever since. The stock has paid substantial dividends and increased in value tremendously. Warren's patience and long-term vision has paid off, proving that good things come to those who wait. Even legends make mistakes, and Warren is no exception. But what sets him apart is his ability to learn from those mistakes. Imagine a young Warren working various odd jobs, from selling newspapers to running a pinball machine business. He learned the value of hard work and the importance of contracts after his grandfather tricked him into working for 90 cents. These early experiences taught Warren the value of learning from failures. He acknowledges that not every investment will be a winner, but that's okay. Over time, it takes just a few winners to work wonders, he says. Warren's investment in American Express and Coca-Cola are prime examples. He made few great decisions that have significantly impacted his portfolio, even though not all his investments were always successful. During the 1960s, American Express was involved in the salad oil scandal, causing its stock price to plummet. While many investors fled, Warren Buffett saw an opportunity. He understood the intrinsic value of the company and bought the shares when they were extremely low in value. This decision turned out to be highly profitable in the long run, and that is how Warren Buffett learns from his mistakes. Warren's faith in the American economy is unwavering. He often talks about the American tailwind, a term he used to describe the constant growth and innovation in the US economy. Warren believes that the American economy, despite occasional showdowns, always picks up in momentum again. Imagine Warren during the 2008 financial crisis. While others panicked, Warren saw an opportunity. He invested in the struggling companies like Goldman Sachs and General Electric, believing in the resilience of the American economy. His faith paid off, and those investments have yielded substantial returns. Warren's belief in America's economic engine has guided his investment decisions for decades. He advises investors to never bet against America, as its propelling force has always returned, driving growth and prosperity. As a young boy, Warren worked for his grandfather in a grocery store. One day, his grandfather tricked him into working for 90 cents, much less than he expected. This lesson on the importance of contracts and understanding the value of work stuck with him throughout his life. Warren Buffett has navigated numerous market downturns with a calm demeanor. During the 2008 financial crisis, while many panicked, Buffett saw it as an opportunity. He invested in companies like Goldman Sachs and General Electric, showcasing his faith in the American economy and his ability to stay composed during turbulent times. Warren Buffett's story is a testament to the power of simplicity, the importance of temperament, the value of long-term thinking, and learning from your past mistakes, and also having the faith in the broader American economy. His principles have inspired millions of investors all around the world. Well, friends, if you found these insights to be valuable, consider applying Buffett's principles to your own investments. Stay calm, think long-term, and focus on the intrinsic value of your investments. Don't forget to like this video, subscribe to our channel for more such insights, and share your thoughts in the comment section below. Until then, stay safe, and I'll see you all in the next video. Bye for now.